Let's bring our next guest, Dan Les, on to hear what he's got to say about it. Let's bring on Craig Bolanos. He's co-founder and wealth manager at VestGen Wealth Managers in Chicago. Thanks for being on, Craig.
Hey, Scott, it was a happy Friday up until we decided to go directly after Apple on their iPhones and go ahead and threaten the EU a bit. But am I going to miss the fact that the last batch of pennies just got produced, so the pennies being phased out in 2026? Nah, not so much.
Yeah, it's going to upset the long weekend for some folks here. He came out, just to clarify, President Trump put on Truth Social that he wants iPhones to be made in the States, and he's going to put a 25% tariff on all iPhones that aren't. And then he also added that the trade talks with the EU had slowed and weren't going anywhere. So starting June 1st, he wants to slap a 50% tariff on them as well. So that obviously has upset the markets. You've heard what I just said about where we stand when it comes to the equities, but everything is selling off hard here. And I think I've seen this movie before. What say you?
I think I've seen this movie before, too. I mean, we've had this glorious de-escalation tailwind at the market's back for what feels like 5 to 6 weeks. In fact, I think this is one of the best stretches we've had in the last 75 years. And I got to say, going into the holiday weekend, a re-escalation of trade war rhetoric, I mean, it threatens stuff. I mean, do I think we're going to retest the lows? No, I don't think we're going there, but the reality is it's unwelcome news for many people as we close out the month of May.
Yes, it is. There's going to be a lot of eye rolls, that's for sure. And this is what he wants to do. And Tim Cook was at the White House on Tuesday, so obviously those talks did not yield the fruit that President Trump wanted them to. And he also mentioned again, like I said, that he wasn't getting anywhere after this 90-day pause with the talks between ourselves and the EU. So is this an opportunity? I mean, is this something he's threatening to get people to the table again? I want to buy on dips, but I'm not sure this is a big enough dip for me.
No, I don't think this is a big enough dip right here to go ahead and get too interested. I mean, we've said time and time again on your show, I think that trading range is at 5,100 to 5750 at best. Anything above 5750 is gravy. That's where we're hanging. So no, I'm not interested in buying here at these levels yet. I think you got to wait for things to come down. But yes, this is definitely just using muscle and leverage to get the way that the administration wants. Whether that's the right way to do it or the wrong way to do it, history's going to write its own course. We'll just have to see what happens in the days and weeks to come.
Yeah, it's amazing how things were looking to be. I saw the headlines before this all came out, and most of them were, stocks muted as we go into the long weekend. Nothing's really happening, and then bam, he kicked off with Apple, and he followed it shortly thereafter with the EU. So here we are.
And Scott, I think that's what's unnerving. What's unnerving is, listen, going ahead and putting the leverage against the EU, that's fine, but starting to make comments to have singularity against individual companies, that's where people get a little bit more worried. Because it's not just about the iPhones being made here. It's the message to any business in America of what the administration feels, manufacturing, or in this case, assembly, where that needs to occur.
And the price difference is, I don't know who to believe. I know Dan Ives is not too hyperbolic. I mean, he's all right. He's with Wedbush, and he came out the other day and said that the difference in price between having it made here in the U.S. versus having it be made in India or wherever, China too, would be the difference. Right now, he says this iPhone, whatever they're talking about, is around $1,000. I don't have an iPhone, but he says if you want to make it here, it's going to be $3,500. I mean, that's significant. That's huge.
That's really significant, and there's no way that you can reorchestrate the supply chain in a near enough period of time to go ahead and reconstitute. So, in the same way, maybe it's just positioning on the EU. It's the same way as positioning on Apple to say, hey, we need to see you make definitive progress and moves to get to a point of systemic change over the next several months and into the next year or two to onshore or start nearshoring parts of your supply chain to make us happy. But you know what, Scott? my biggest investment for everybody is start accumulating pennies, everybody. Scott, you and I talked about it before. The penny is dead. It is old money. The last set of pennies is literally getting minted and shipped as we speak.
Yep.
And is the penny going to cause mass amounts of inflation because obviously retailers, sellers are going to need to round up to the dollar? No. If we were to mess with the nickel, I think it would be more intrusive. But seeing the penny's demise makes me sad because we grew up with it. What are people going to throw in fountains and put in those little coin things that the kids play with to watch the money circulate around? But this too will be okay.
Watch the phrase penny candy drop out of modern-day lexicon. It's not going to be there anymore. I appreciate you coming on. Have a great long weekend, Craig. You deserve it. Super content. Love you on the show. Craig Bolanos, he's the co-founder and wealth advisor at BestGen Wealth Advisors up in Chicago. We're going to go away. Don't forget to text in. We got a texter. We're going to do one when we come back, but that's 855-776-6147. Want to hear what you have to say. Or call in. That'd be great, too. A text, call. We'll take whatever. We're going to go away, pay some bills. We'll be right back right after this.